Um, it's now down to Alex Zhang, who is the Senior Manager of the International Department of Nanhua Futures, to take up the baton. Alex, I will pass over to you.
All right, thanks, Julian. So I'm Alex, and thanks for the introduction. So I will be the alternative speaker today for you all, and I want to give a quick thanks for all the attendee and the host, and also the Mr. Jolie Chen representing the exchange, and Julian Helmet for CQG, and also Austin on the law side. So I think the whole thing we're trying to build here is because we're now and we get CQG as a incredible platform provider with professional IT support, and also Sheffy and INA is like I would say it's the closest exchange that we've been working together with in terms of the international business, and also the JunHe LLP. If you have any law side questions, you can ask later on. So I will kickstart for my part. So we've been covering key insights for foreign investor participation in the Chinese derivatives market. Okay, so the first one, we're seeing a little bit of background information. So this is the landscape of China derivatives market. On the top row, we're seeing the volume by region, global derivatives trading volume actually. So as we all know, the whole futures thing representing the derivatives market originally starts in Chicago, US. So we can see at the very beginning the trending on the North American line was on the top, but starting from the 2018 or 2019-ish, the Asia region, especially China, we are growing rapidly in terms of the trading volume because like all the exchanges and also the trading knowledge for every investor here in China are growing more and more with their each expertise. So that's why we are here in China and trying to build a bridge connecting here and there with, as also Mr. Jolie Chen mentioned, so probably with EU region and Asia Pacific area and also North America as well. So on the right bottom, we're seeing the readiness of the firm for Chinese futures market. So this is the data we get from a reliable third party showing that comparing with the year 2020, there are 30%-ish of the potential clients or even existing clients, they are trading Chinese futures market. And now well, actually to get either more trading volume or they really wanted to get more trading scope, in terms of the trading contract. And the last part, it says at this time China's futures market are not relevant to our business, and to that part we are seeing about 10% of the decreasing needs in that one. And this is a comparison chart for three major channels for accessing China derivatives market. So on the right corner, we are seeing the comparison, but we are going from top to bottom one by one. So first one is QFI. So that's where we've been focusing on lately. And it's facing financial institutions and trading firms as our potential clients. For funding, usually locates offshore, and either it's self-financing or fundraising. It's really up to the clients. And for a bank account, so it's QFI, and the QFI has their own designated custodian bank account. Well, it could be chosen by the client's preference, but we do also have our own recommendation as well on our side as a broker. And margin, we will take RMB as the margin currency, and the treasury bond will take a 20% discount. For tax, the profit portion exempt from value-added taxes, but there is a possibility that it will be subject to a 10% capital gain taxes. And for the second one, we've been working closely with Sheffy and INA is the internationalized contracts. And mostly we're dealing with industrial clients and financial institutions and also trading firms as well. And for this one, especially comparing with, so the difference comparing with the QFI one is that it has a dedicated NRA. It's called a non-residence account. If it trade directly with the China broker, so the clients have to open their own NRA account before, well, it could be parallel running when the clients come to us as a brokerage business. And also offshore bank account if we trade with qualified overseas intermediaries. And then we will have to mention that one of our Hong Kong subsidiaries is our current overseas intermediaries. It's HGNH International Futures Company. It's located in Hong Kong. It's a licensed and it's fully licensed and a regulated entity. And for margin, we take RMB as a primary currency, and if you use US dollar, there will be a 5% haircut, and it's tax exempted as well. So the third one is what we usually say the WFI or WFI PFM, and the same class, the same type of clients, the same type of the funding, but the bank account usually it's a domestic bank account instead of it's like an offshore or it's a custodian bank account, and the same margin policy as QFI, but it does have 25% of income tax and 6% of value-added taxes. So the comparison generally among these three is that QFI comes with great fund flexibility with a wide range of investment instrument comparing to internationalized contracts. But when the clients need to only trade in an internationalized contract, the benefit for them is that the fund stays in offshore, but it comes with a limited investment scope compared to the QFI. And in terms of the WFM structure, it is a little bit comprehensive, and we will usually provide that with some of the existing clients. We can give them such like a one-stop solution when they come into us, and we can write a whole project for them to to further working together with. And the next one we will give a little bit definitely. So I believe most of the attendee here in this webinar are familiar with what QFI is and what was QFI. So it was QFI and RQFI back then, but since the new regulation, it comes together with a whole name with QFI. So on the right diagram we are seeing right here, QFI investment scope is, so it does have interbank market, usually it's bonds. When the clients ask us if the QFI can investment interbank bonds, no matter it's bond derivatives or bond repurchase, it is a definitely yes. And also for sure, it's a long-term yes for the QFI is that stocks exchanges. So no matter it's shares or IPO or it's security margin trading, these are all included in the QFI investment scope. And the third and fourth one is we've been working on as a futures brokerage here in China is that for futures exchanges, if the clients want to invest in via QFI for stock index futures and options, but these two are for hedging only. These are the CFEX, the China Financial Exchange, Financial Futures Exchange actually, contracts. And also the two on the following one is the commodity futures and options with a selected product we'll be showing on the next slides, and also others. So it's private funds and public funds, and private funds can also be viable with QFI. But for these funds, these have to stay with exactly the same investment scope as QFI. So you are not allowed to to route your trading path through public funds and private funds. So this is the QFI investment scope we'll be talking about in the last slides. So it shows the QFI investment scope and the internationalized contract on the right side. So we are sorting by exchanges, DCE, so Dalian, Zhenzhou, Shefi and INA, and also CFEX. So together on the left bottom, we're seeing if you are investing through QFI, then you are viable for 27 futures contract plus 19 option contract. If you are going in via internationalized contract, then you are tradable for 14 futures and then 9 options contracts. So that's why we said if you are going through QFI, you will get a wide range of investment scope. And that's actually what the clients want mostly. And for exchanges, we are seeing right here. So Shefi and INE, here we put them together and they do both have copper, but the Shefi copper is the what we call the domestic copper, the domestic Shanghai copper. It does have futures and options together, but it's not viable if you are if you are the internationalized contract trader. And this copper right here under INE is what Mr. Jolie Chen mentioned in his part is the bonded copper one. So you can both trade the bonded copper via QFI or internationalized contract, but the shortcoming is that it does not have its options yet. But from our past experience dealing with the clients, so probably 3 or 4 years ago, before bonded copper comes live, the most needs we get from clients is actually INA crude oil for sure. So people are using the Shanghai crude oil as their left hand, and the right hand they're probably holding the ice brand or the CMA. So they're doing the arbitraging. But now, since the INA bonded copper are getting more and more popular, we are also getting more needs from the EU region, the usual LMA trader that are interested in these kind of arbitraging. And this slide we're showing right here is a bit of a risk management in-depth review here with the exchange rules. So, so basically we have the margin rules. It's the real-time risk rate reminder. We set 80% at the early warning, 100% the margin call. If you hit 100% and you did not add fund further, or you didn't liquidate such positions till 2:30 p.m. and we goes into forced liquidation process on a T+1, so which is also the night, which is usually the night session of the same calendar day of the date. And hedging rules, it's applicable for the CFEX trading because the CFEX, the stock index futures and options are for hedging only. And we do also, the exchanges actually, the exchange do also have position limit and trading limit. And also here are some suspicious trading activities. They have their own flag rules. If you are, you're not allowed to spoofing or anything like that. So we have a whole manual book showing each exchange have such kind of rules indicates some sort of products. So these are also what we usually get asked when the clients have already on board and they are really curious about how the risk management are provided on our side as the brokerage, and also how it is provided on the exchange level as well. And here on the next slide, we're seeing our IT solutions here for Nanhua. So in the top left corner, we are, it is the trading network resources. So this is a topology of some of the major data center or data hubs here in China hosted by the exchange. And also we are seeing these, we can share this bigger picture later on if anyone's needed. So here on the connection line here, these are the dedicated or the leased line we get from our server room with from the data center to the server room, and we do have each. So we do have plenty of server rooms co-location at the nearest site for each data center. And on the right one for so on the clients. So for general clients, we usually provide with them, the designated trading platform on the client's preference from their past use or what would be their first choice. So we have Bloomberg EMSX or Bloomberg Trading Book. We are dealing with Bloomberg a lot lately, and also CQG, TT, eSunny, and CTP Fix. And what we have to mention here is that what we mostly get needs from the overseas region when the clients are the type one, the general type of clients. We usually get their trading needs on the CQG platform because most of them are really into the auto spreader, the arbitraging function. The interface is really what they are choosing, is what and why they're choosing CQG over other platforms. It's really convenient and straightforward for them if they're a really arbitraging type of clients. And on the right side, we are connecting for sure each of the exchanges, CFEX, Sheffield INA, and DCE and ZCE. And also for the upcoming Guangzhou, the JunHe is also one of our potential futures exchanges right now. And for co-location type of clients, we have, you can see the server room names correlated with each exchanges. So, but we have to mention here on the top one, the CFEX, the CICC mobile server room. If you are a co-location type of clients, we are moving to our new site because the CICC mobile is really at its full power capacity right now. So we are having another server room. It's around the same physical distance with the CFEX exchange server room. So it has approximately the same latency as the previous one. It's called the CFEX Tangzhen server room. And also on the third column, the trading interface we provide accordingly for these exchanges. For example, for CFEX, we usually provide NHTD, that's our self-studied trading platform with API connected to CTP, and also EDA and Shanghai REM. These are the three top choice for CFEX. And also for Sheffield and INA traders, we give the CTP subseed and NHTD, EDA, Shanghai REM, and eSunny as well. So you can see for if you are a Sheffield INA, no matter you are a bonded copper trader or you are a crude oil trader, you have the most you have the most number of choice in terms of the trading interface. And for the market data, we usually provide with NHMD. So NH is Nanhua. So it is also one of our self-studied market data platform we usually provide to the clients. And also, if you are a Sheffield INA trader, the market data, you can also choose Shanghai REM as well. So the next one, we are seeing the data support. So Nanhua Cloud Services. So the database resources we usually provide to the clients is really popular this year, is that we store such things like Shanghai and Shenzhen Stock Exchange data, bond or public-private fund, or some of the historical exchange market data or API real-time market data. We upload those and store these on the Nanhua Cloud, and we can provide the access to access services of Nanhua Cloud to the designated clients if that's really what the clients need. And on the bottom, it's just a little configuration. It's a configuration says you have to meet these requirements. It's got to be Windows to Linux operating system to dial in the Nanhua Cloud services as well. And next page is the asset management services we provide. We usually do this as our, we can call it the value-added services. So it's, we can match clients and tier one investment advisors. So no matter you're holding funds looking for a top tier investment advisor for trading or vice versa, we can do it for you. And also such things like customizing fund vehicles for clients or accessing to Nanhua wealth management or FOF allocation, overseas structured fund, etc. Because we do have our like the giant group of our subsidiaries in Hong Kong, Cayman Island, we can see in the next couple of slides. So we can fulfill any types of clients' needs, basically. So next one we have to mention is that it's also one of our self-studied Nanhua commodity index. So it's a really popular index. We are seeing the growing needs from the EU region recently, actually. So it's so the Nanhua commodity index was established by Nanhua Research Institute and is compliant since June 1, 2004. So we can see the diagram at the bottom here. So since 2004, it has strong correlation with the CRB commodity index and also Bloomberg and S&P commodity index as well. But it starts drifting apart around I think it's 2015. So the difference in the range of ups and downs is mainly caused by the difference in covered variety and the corresponding weight in each commodity index. So we can see since 2015, our Nanhua commodity index are growing, drifting apart, divisively comparing with the rest of the three. So if you're interested in getting any types of these commodity index data, we are more than happy to assist. And furthermore, it's a little bit more background about Nanhua. So we are a first Asia-listed futures company with derivatives business as the core in China here. So we established the company in, so the company actually established in 1996. It's a global service platform for financial derivatives. And we have to mention that we are the Chinese futures company with the largest number of overseas subsidiaries. So we can see the top left map here, probably too small, but our headquarters is here in China, Hangzhou, and we have 40-ish branches across the whole globe, including here domestically in China, and also we have our Hong Kong subsidiaries, and Hong Kong and Singapore are mainly focusing on the Asia Pacific area, and our UK branch here in London, and the US branch in Chicago, and also Cayman Islands as one of our major SPC company working with our Hong Kong RA9, the asset management company, together providing clients with, together with a QFII or designated accounts. It's also and also the structured products as well. Thank you, and that will be all the content we want to share as Nanhua Futures today. Feel free to contact us, our NH Overseas at nawa.com, or simply follow us on LinkedIn, Twitter, and Facebook, or simply subscribe our YouTube channel. You can search our name. On the right corner should be the presenter of today's Mara One, our Assistant Vice President. And you can follow her on LinkedIn or simply scan the QR code to add her WeChat for convenient communication for any future collaboration possible. All right, thank you guys that's all my content for today. Back to you, Julian.